So the markets concluded that this is good news because it means that the Fed is going to be able to start cutting rates sooner because they're winning the battle on inflation. Well, again, the reality is the numbers show that the Fed is losing, but not just these numbers. All the numbers I went over on my last podcast that have nothing to do with the CPI, but all prove that inflation is entrenched, that it is not going away. It's not getting anywhere near 2%, and nothing that the Fed has done thus far is going to bend this curve. That inflation is here, it's going to get worse, and it's not just in the United States. This is a global problem because central banks all around the world have made the same mistake, and they have enabled governments to profligately spend money. And as a result of all this extra spending and all this money printing and all this easy credit, the world is dealing with an inflation problem. The initial reaction to what was perceived as better than expected inflation news, meaning lower number, gold rallied. Again, why? Gold is an inflation hedge. So gold should rally when inflation is higher than expected, not lower. But in the perverse world that we live in, everybody is focusing on the Fed. Lower inflation means the Fed can cut rates sooner, and that's perceived as being good for gold. Higher inflation means they can't cut rates, and that's supposed to be bad for gold. The reality is high inflation is better for gold because gold is an inflation hedge. And what high inflation shows you is not that the Fed is going to have to fight harder to win. It shows you that the Fed is losing the fight against inflation, and that is bullish for gold. So traders still have this whole thing wrong. That's why whenever you see a sell-off in the price of gold on hotter than expected inflation numbers, you want to buy into that dip. And in fact, gold, which was up $10, $12 early in the morning, sold off. It was down better than $10 when the market sold off, when people started to think, oh, wait a minute, this isn't a good enough improvement. Maybe we won't get the cuts. And then gold sold off. So it's always making the wrong move, but it was still a buying opportunity. But one of the other reasons that we might have seen a sell-off in the price of gold today was some supposedly tough talk on inflation coming from Christine Lagarde out of the ECB, who in an interview said we're going to have to hike rates at our next meeting because inflation is still a problem, which is a massive understatement. The year-over-year CPI in the Eurozone is 7%. That's down from its highs, but it's still well above the 5% that we've got in the US. So we're 200 basis points higher, but inflation, the way they measure it in Europe, is 200 basis points higher. So the interest rates in the Eurozone are still negative. You're at 3.25 rate and 7 inflation, right? You're 3.75 negative rates. Now the US, finally, we actually have a slight positive rate. We got 5.25 Fed funds and we got 4.9 inflation. So it's slightly positive. Now, of course, after tax, it's still negative, which I think is more important because a lot of people are paying taxes on the interest that they earn on US Treasuries. They're paying federal tax on that interest. Well, you don't get to deduct inflation from your tax. So if you're collecting, let's say, 5% pre-tax, and after tax you're left with 3%, well, if inflation is 4.9, you got negative rates. And so a lot of people still have negative rates on an after-tax basis, which is really what's important because that's what you get. You get the after-tax yield. You don't get the pre-tax. But of course, all the rates are negative if we use a real inflation rate. They only appear positive because the government is lying about inflation through the CPI. So rates are still negative everywhere. Inflation is a problem that's not going away in Europe, and it's not going away in the United States. One person I think who understands that inflation is a problem is Warren Buffett. Warren Buffett was probably as pessimistic as I've heard him. I mean, he's normally kind of like a cheerleader for the U.S. economy and for the markets in general. But he had a somber tone at this meeting. So, he is worried about the economy. And one of the reasons he's worried is because of inflation. And he has talked about owning Berkshire as an inflation hedge because it has real businesses, real assets. A lot of people think that Warren Buffett doesn't like gold because he says that gold does not compare favorably to stocks as a long-term investment. And I agree with him. Gold is not an investment. Gold's money. Gold's a commodity. An investment is a business that generates income, or it's investment property that generates rents, right? That's an investment. Gold isn't an investment. You can own gold. It's a store of value, but it isn't going to generate returns for you the way an investment is. So Warren Buffett doesn't like gold as an investment, but he does prefer gold as a currency, as a store of value to dollars or euros or yen. Because the reason Warren Buffett is holding a lot of cash is that he thinks stocks are going down and he wants to hold some dry powder. He really should be holding his dry powder in gold, because I know that Warren Buffett understands that as a store of value, gold is better than cash. Now, maybe he thinks that earning 5% in a money market, that's better than earning 0 in gold. I don't think so, because I think gold is going to rise by more than 5% a year, given all the inflation. And so that Warren Buffett would be better off keeping his dry powder in gold than in cash. And the reason he's doing that is hoping to buy actual investments in the future at a better price than he could buy those investments today. I think it would be better for Berkshire shareholders if he did that using gold, not dollars. And maybe at some point he's going to start doing that, because he doesn't dislike gold as an alternative to the dollar. He just dislikes it as an alternative to stocks, to real money. The alternative that Warren Buffett fails to recognize is gold. Gold is the alternative. And in fact, look at the numbers. Central banks are now buying gold at a record pace. That information just came out. But despite the fact that central banks are buying gold at a record pace, they still don't own nearly as much as they have in the past. They have a lot of gold to buy to catch up to where they need to be, which is much, much higher than they are right now. So the world is already in the process of replacing US dollars with gold.